Hey everybody, just wanted to give you a quick update on what's been going on in the Claremont real estate market. So let's take a quick look at what's been going on with prices. We're down about 10% compared to this time last year. So median price is about 870 right now. It was about 970 last year. Last month, it was about $20,000 higher. So that's about 2% drop since last month. If we look on the bigger picture here, we can see that things peaked out in the summer and then have been on a slow decline since then, with some peaks and valleys in between. Claremont's a smaller market anyway, so this number tends to jump up and down a little bit more than it does in some other places. But I think the big thing to notice here is just that we're not too far off from last year's numbers, and we're still way above our 2019 prices. So it's not really like the market is crashing right now. I think it's just a slow adjustment going on for what's happening with interest rates. But let's look at how the supply and demand dynamics are going. So I'm going to zoom in a little bit here to make this easier to see. Okay. So we've got 1.7 months of inventory right now, and the transition to a buyer's market would happen somewhere in that 5 to 7 months of inventory range. So we would have to nearly triple the amount of inventory that's available relative to how much demand there is in order to shift the Claremont market into a true buyer's market. Ordinarily, under these conditions, we'd expect prices to continue climbing really fast. But interest rates have climbed so much that's counteracting that demand. So people just can't afford as much, even though buyers still significantly outnumber sellers. I mean, this is one of the lowest months of inventory times that we've seen in the last little while. So that tells me that there's still some upward pressure from demand on prices, and it's just not showing up because of the counterbalancing effect of interest rates. So let's switch gears into looking at what's going on with inventory. So there are definitely a lot more homes for sale now than there were at this time last year, with 43 now and 29 at this time last year. And we still haven't reached pre-pandemic levels of available inventory either. So even though things are improving for buyers in terms of their options and things like that, it's still going to feel like, golly, there isn't that much out there in my price range. Mostly because there just aren't that many houses for sale compared to most of history. So in the big picture, I think the takeaway here is the market is a little bit less frantic right now, and sellers should be a little bit more conservative on their pricing strategies because buyers can't afford as much as they could before with higher interest rates. That's causing some sellers to be stuck on market a little bit longer, which is making them more flexible on their terms, and sometimes a little more flexible on whether or not they negotiate on their asking prices. So buyers may have opportunities to get more favorable terms than they would before, maybe some help with closing costs, maybe using a down payment assistance program is possible now where it wouldn't have been before. So if any of this is interesting to you, or you have questions, or you just want to find out what's possible for you in today's market, feel free to reach out. My cell phone number is 909-576-0695, and I look forward to connecting soon. Bye for now.